Well, let's get to our big conversation today. The Central Bank of Nigeria's Monetary Policy Committee meeting opens today in Abuja. Of course, that meeting is on with analyst expectations of a mild rate cut pointing to a steady cooling of inflation rates. Now, recall that the National Bureau of Statistics, in its Consumer Price Index report for October, recorded a drop in headline inflation to 16.05% from 18.02% the previous month, giving room for a possible 50 to 100 basis points reduction in the MPR. Now, the calmer inflation outlook alongside stronger market confidence is shaping the tone going to the meeting. Now, as the Monetary Policy Committee members converge for this two-day meeting, the Apex Bank's governor, Mr. Olayemi Cardoso, had highlighted the impact of the previous MPC decisions, including making naira more competitive at international markets and improving investment climate for global investors. The CBN governor says ongoing policy easing and structural reforms are beginning to filter through to the broader economy. I must thank you so much and congratulations on your new role.
Thank you very much indeed for having me, and it's my pleasure to be here today.
Yeah, it's good to see you. Yeah, this time not in the studio, but I can still see you clearly here. So, Mr. Roberts,
thank you.
I am sure that you are aware of a lot of expectations around that conversation today around the MPC meeting. You know, we were supposed to look at, of course, burning economic issues, but of course, that's one of the most important issues at this time, because whatever resolution comes out from that room determines a lot regards our economy. So let me ask you, as someone that has been following all of this news and all, what do you think would be top in that chart today when that conversation is already on? What do you think will form that conversation? What will be the top priorities surrounding the decisions that we expect tomorrow at that meeting?
Well, I think that the central bank is going to look back in retrospect with a sense of fulfillment, knowing where the governor of central bank, Dr. Yemi Cardoso, started off with key monetary policy. Speaking about inflation, the headline inflation, the chaos more or less that we had in the Nigerian currency market when he took office, which I think about 2 years ago now. But see, it's been about 2 years of his administration at the Apex Bank, and everything looks good, at least from key monetary policy, variables that the MPC will be considering. Of course, we are aware that inflation will take a top chart on the deliberation, so to speak, because the central bank did not mince word from the beginning, making the market to understand that that priority objective is to stabilize prices and to ensure that exchange rate is stable. And to that end, should I say that the rebasing exercise, which happened in the first quarter of the year, has also contributed in no small measure to achieving what the central bank has achieved now. Because today we are talking about headline inflation at 16%. You've seen that consistent deceleration, I would say, for the last 6 to 7 consecutive months. We have seen that headline inflation has significantly moderated. Of course, that is happening on the back of the respite and the stability we are seeing in the domestic currency. When the governor took office, we could say that speculation was the order of the day. Because, if you buy FX in a week and the next week you are gaining 5 to 10%, you don't need any prophecy to know that that is the way to go. So we had a lot of speculators in the market at that point in time. But the stability that the central bank has been able to achieve through its consistent intervention, and of course, the support of the reserves, which is currently at around $44.1 billion, is remarkable. And it has created that confidence for the central bank to continue to support. And I tell you that for as long as the currency market is under check, headline inflation will also continue to moderate, because the major trigger for domestic currency volatility is usually the angle of currency, that is the angle of exchange rates that feeds into the headline inflation. So I'm saying that the reason why you will see much more respite in the headline inflation is because the currency market, of course, is also stable. So all of those issues are the things that the Monetary Policy Authority will be considering as they deliberate for their, by far, their last meeting for the year, because it's the last Monetary Policy Committee meeting for the year. And I say that from where I see it, I believe that the central bank will look back with a sense of fulfillment, but then not forgetting that there is still much ground to be conquered as they go into the new year, and we see more pressure points, especially from energy that has been fully deregulated in the Nigerian market as we speak.
Before we look at global concerns, I'm also thinking that this shift that we expect in this meeting, I hope we are not over anticipating this, because some are saying we should expect 100 basis points. Some say it could even be more. As far as I know, that this will be good news for the real sector and, of course, players in the real sector. But, at the time, it was we're caught between the devil and the Red Sea, and we don't even know where we're headed with regards to some other economic fundamentals surrounding these decisions that could be made. So in your total submission, we also expect the Fed to also reduce rates. That's the Federal Reserves. So that's what's happening everywhere around the world. But do you think Nigeria has some specifics that could make this shift not go as much as expected?
Well, I think one thing is clear. The reason why the Monetary Policy Authority anywhere will raise interest rates is because you are trying to anchor inflation. You are trying to put a rein on inflation, right? The United States, for example, the US Fed has a strategy called inflation targeting, where there is a level of inflation that you want to achieve. And for as long as that level of inflation is maintained, right, you won't have any much justification to keep interest rates at a much more higher rate, except, of course, it's anticipatory. That is, you're expecting some major shifts in the economy. And that of US is peculiar because of all of the trade wars, tantrum, issues of war, coming from the president. The US Fed will be much more very careful, and I dare say that they have been very careful. Otherwise, you could have seen a much more drastic measure to cut interest rates. So cutting interest rate for them, will not be a disorderly step to take as well. But look at Nigeria. Yes, you did mention, is it possible that we have a peculiar situation? Indeed, our situation is peculiar. But to the extent where we are now, MPR, that is monetary policy rate, at 27%, is too far off from where the current market rates are sitting. If you look at Treasury bills yield, right, currently at an average of 18%, bond yields are much lower, between 15 to 16%. And it's not looking like those are about to tick up anytime soon. But then you see the market policy rate, which is supposed to be a benchmark rate, more like a guide for all of the other market rates within the economy, sitting comfortably at 27%. I think that it is not out of place for the Monetary Policy Committee to shift the needle.
Mr. Roberts,
Mr.
Roberts, please allow me to interject you. So you were making a point before that break around how our situation seems to be a bit peculiar.
Absolutely. So that is, the Nigerian situation is peculiar, but to the degree that we have achieved so much progress. And I was trying to draw an analogy between the current benchmark interest rate, which is the monetary policy rate, at 27%, and where the market rates are currently. I mean, if you check Treasury bills yield, on the average, you see them at around 18%. You check bond yields between 15 to 16%. So that's far off, almost, more than 10, 1,000 basis points away from where the monetary policy rate is at the moment. So it will not be out of place for the Monetary Policy Committee to cut interest rate. Now, the magnitude is now what we have to watch out for. I think that 100 basis point is very conservative, given that analogy that I have painted. But then I know that the governor and the entire members of the committee will be very careful as well, knowing that Nigeria's inflation, it's something that requires a little bit of caution because of all of the pressure points that can come. But we have a lot of buffers, over 1,000 basis point buffer between the current market rate and I'm tracking the treasury yields, by the way, but if you look at some other commercial rates, especially at the capital market level, they are still within a tolerable limit, which shows to us that we have a large, leeway for the MPC to move the needle. So it will not be out of place at all to see that rate cut. But definitely, the MPC is not about to give up on that mandate to ensure that inflation is contained. And to that degree, exchange rate movement is also critical. And that's why you see that the central bank is doing all it could, using the reserves, coming at different points in time for intervention to ensure that the stability that we are continuing to enjoy on the foreign exchange front is also sustained. Because to the level that we can sustain that, the central bank can continue to reap the gains that we see from price stability. So I expect that, yes, a rate cut is not out of place, and we are not being too optimistic to expect a rate cut. By the way, I think that the central bank may just do it as a signaling, so even if I see a 50 basis point cut, it's a signaling to say we are not that rigid, we are only focused on the objective that we have set out.
Indeed. And I think some positives are coming along that route, talking about the objective, the key, stabilizing the naira and all of that. We've seen that stability. Everyone can agree to that fact. Now, back to inflation, which is also one of the terminologies that would shape this conversation or decisions after this two-day meeting. Inflation is coming down, and we are looking at the target of 15%. I think that's government's target for December. Let's see how that plays out. But really, harvest season and all of that seems to be supporting food inflation and all of it. But I'm asking you, do you think that we'll continue to see this decline? I'm looking at December. Some say we could have an uptick again in December, considering spending, dirty December, and all that we've been looking at. What do you think inflation will be giving us as we move to the end of the year?
So far, we have seen inflation figures up until October. You recall the last time I was in the studio, we were analyzing the September inflation, which printed at 18%, right? And we were talking about, uptick that we have seen in the pump price of energy, pump price of petrol, particularly at that time. But then, despite that, we are seeing October inflation at 16.1%. And I want to recall what the communique of the Monetary Policy Committee at the last meeting in September. It read that the central bank was, taking the decision to cut interest rate because the sustained progress in inflationary pressure has been maintained over time, and that there are projections that the headline inflation will continue to decelerate. And that's what we have seen. Don't forget, there is a base effect factor that is still playing out. Despite the month-on-month, you could see that, the last period, we saw 0.7% month-on-month increase. But in the October inflation, it was a 0.9% month-on-month. You still saw that uptick month-on-month. However, the headline inflation decelerated by more than 200 basis points to print at 16.1% from the level of 18% that it was the previous month. So it is definitely not attainable for us to print at 15% come December, because that base effect will continue to play out up until February or March, I think, when the rebasing exercise was done. We have only seen October inflation at 16.1. November is rounding up, and when that happens, you could see this November as well at 15% levels, or very close to 15%. So definitely December may not be out of place, despite the utiled increase in prices. I mean, that will come with the December period, because the headline inflation is still playing out. And these are the factors I believe the MPC will be looking at to take their decision for tomorrow.
So what more is needed to complement this positive? Because, of course, if we have a rate cut, it is a positive. If inflation continues to decline, which is what we've seen, food prices continue to decline, what do you think needs to be done to complement these efforts of the monetary side?
I think that, we can't overflow it. The Monetary Authority has done really well over the last 2 years, because we had an economic crisis at our hand as at 2 years ago.
Yeah.
Because we're battling. I mean, there were different projections. In fact, projections went as far as 2,500 naira to the dollar for the exchange rate. But see where we are now. It's a good place to be, and we can still do better. But I mean, there is a limit to what Monetary Policy Authority can do. So I agree with you that there are more complements that can be done from the fiscal side. But we can take it, one step at a time. One thing that I always emphasize is the insecurity. When there is no security, there is no peace. And when there is no peace, there is no prosperity. So one of the things the government can do on the fiscal side, which is not the, prerogative, or is not within the capacity of the central bank to handle, is to ensure that there is security in the 36 states of the country. Because the food baskets of the nation, talking about the middle belt and all other places where our food items come from, you need stability of, security of lives and property for people to be, to be confident that when they go to the farmland, they are not going to, lose their life in the course of earning a living. So that cannot be overflowed, because once we do that, and we have more supply coming in from the the farm produce, what you will then see is that prices will crash. And as you see prices come down, it will impact significantly, because food inflation is still food accounts for about 40% of our headline inflation. So it's significant. It's about the IF. So if we can put a rein on food prices, then we can also achieve slower or pace of inflation in the country. So that is one level that the government can do. But much more is some, what we call the behavioral, attitude, which I always talk about. That's behavioral finance. The central bank cannot do much about it. Even the fiscal authority cannot do much about it. It's about the discipline of the market actors. Right? In every market, you see the producers or the suppliers, you see the consumers, there is a price. Now, that price is what impacts on the headline inflation, which we analyze every now and then. But many factors are responsible for determining that price. One of which I explained is the supply factor, which security issues will resolve. But then, how do you solve behavioral issues of people who have fixed prices when indeed it was justified? But then now prices are beginning to moderate. But people kept the prices they fixed when it was at a higher level. That is a behavioral thing that government can only do through advocacy. And there is not much we can do about it than to say, okay, maybe competition and other activities around the market can then make people to begin to moderate. Because again, you will hear things like, oh, I bought this stock when prices were higher. Now that prices are lower, I have to sell this stock before I reflect the new prices. And some people leverage on that to take arbitrage, So, but those are some of the things, maybe consumer protection, agencies have a lot of work to do in that regard to ensure that prices are truly reflective of cost and adjustments that are happening within the economy. If we do that, then we can get a single-digit inflation by this time next year. Not impossible at all.
Great stuff. Mr. Robert Omotunde, always interesting having you join the program. Partner MDU Consulting. And again, congratulations on your new role. See you again soon.
Thank you very much.
All right then.
Thank you.
All right then.